Ladies and gentlemen, K Kim here with the Traders Club. Welcome to the market update. Hope you guys had a good week trading this week. As usual, let's continue with our weekly analysis, starting with, changing my colors again. Hold on a second, let's get it. There you go, red. Start with the spider, diamond, Qs, Russell, Semis, and the banks. Let's start with the spider here and kind of follow up with what we've been talking about. Last week we talked about that rising channel resistance. We're just kind of right at that vicinity. Let's do a little bit of maintenance here in our charts. Let's first do, there's a little bit of gap here, little tiny gap. And so let's annotate that. Otherwise, that's pretty much it. I want to kind of bring this up actually. And I want to actually still leave 292, 295, 292. And then there's like small gap. Let's annotate that one. There's a very tiny gap. And then that gap has been filled. So we got those little gaps there. But I did still annotate 295, 292. Just in case there's some shenanigan as it's trying to break out of this rising pivot, right? That channel resistance. Just in case we see, you know, pulling back a little bit and a gap down, this thing turns into kind of a small island top and then pull back. So I still want to have these level as a strong support level should the price see some shenanigan going into next week. We do have 20 MA acting as support here and here. Remember, 20 MA did act as resistance there. So it flipped back. It is acting as support. If the 20 MA does break, then 50 MA is probably going to be acting as pretty strong support. However, but at the same time, the 50 MA, the vicinity where the 50 MA is, this is where the gap area is. So 295, 292 is gonna be served as strong support. If this thing does keep grinding higher, which is a possibility next week, I still think, you know, 320 is a possibility, you know, towards the end of this year. You know, let's kind of go through some of these levels here. Obviously, there's a long term I'm bullish, and there's nothing I see that suggests that the market is in a crash or going in a recession or anything like that. And really, if you guys have been following me long enough, you guys know that I still can stand on analysis that I've done back in early 2016. All those analysis is on my YouTube channel or my blog at twotradersclub.com. My analysis that I've done, long-term analysis that I've done since early 2016 or mid 2016, I can still stand on that today. And so I am bullish in the long term. This 20% decline did, you know, gave us good opportunity to accumulate. And then we talked about, you know, I was expecting 5 to 8% decline. We saw exactly 7. Also gave me good opportunity as I was buying these dips as well. So only time really I was buying the dip was here and here. Those two. So if you're really not in it in those areas back in like, you know what, 230s and 40s and 70s, it's tough to chase it up here after market has just moved since this low here in June low about 10% in about 2 months there. So, and again, you might be wondering, why is this market grinding? Why don't we have a huge move to the upside? Well, this is how the bull market usually, you know, that's how the bull market operates. You're not going to see, I mean, you will see from time to time some big upside moves, but a lot of times what you're going to see is these grindy moves. That's when the market is well situated. The market is composed. We're now resuming back to primary term uptrend. Notice that I use the word resuming because we're never in a bear market. Something I said in early 2016 that we were never in a bear market. I said in late last year, early this year, we were never in a bear market. People do not understand how primary term uptrend works. People only looking at a short term. That's why you're gonna hear people say we're in a bear market in 2018 or you're in a bear market in 2016. We are never in a bear market. A lot of people don't understand the definition of a bear market or a recession. So we're resuming with this primary term. So it was a pause. We saw 2016, 2017 move, right? So you can see 2016 through 2017. Let me get rid of it. Let's keep it there. 2016, 2017 move, and then we saw a pause. It's like this. Recession, this is a recession. That's a crash. That's a 55% crash. And then we saw a move, and then a pause, move, and then a pause, move, and then a pause. Do you really expect the market? I mean, when was the last time market just went straight up and never pulled back? There's always gonna be a pullback and correction in between, and you're going to see 8, 10, 12, 15, 20% corrections all along the way. We happen to see 20% correction late last year, right? All it is a correction after a steep bullish move that we saw. The market needs to rest a little bit. Market needs to shake some people up. Market needs to punish the chasers. That's kind of what that was. And it gave us a tremendous opportunity. And only the brave, right? The cowards was not able to participate in it, but only the brave is going to reap the reward. And, all the things that I've accumulated down here, all the stocks and everything else, I'm still holding full, right? Unless they're my aggressive strategies. But, the shares and some of the triple shares that are accumulated, which I did back in, as you guys know, that back in late December, early January, I was accumulating triple shares on everything. S&P, Diamond, Qs, Russell, Semi, everything. And the banks as well. They're FOS, SOXL, what is a triple shares for Russell 2000? I forgot the ticker name, but Qs, which is TQQQ, UDOW, and SPXL, right? So I'm still holding those full today, and I actually added more when we saw this decline, and they are doing well here. So I think, the sentiment is bullish. We're bullish in the minor term. We're bullish in the intermediate term, and we're bullish in the primary term. We're bullish in a macro major primary term as well. So we want to continue to give benefit of the doubt if it continues to support the 20. And I don't know when the next time we're going to break below the 20. Only market will know, and it'll let us know. But as long as we're above the 20 MA and 50 MA, really, I want to continue to give the benefit of doubt to the buyers in the minor term and in the minor to intermediate term there. So Diamond. So let's talk about Diamond. Last week we talked about this level here. We've got two levels that is holding currently. Is that level right here. We're holding that and then holding this level. So you got the prior resistance potentially acting as new support. It's lagging today a little bit, but that 20 MA, we're actually seeing that 20 MA getting retested there. We do have a gap. I didn't annotate. You got the small gaps there. This gap though, there was a gap, right? You see that gap right here? That gap has been filled. When the gap gets filled, it does act as instant support. So I think we're kind of retesting that level of support. If we do see, let's move that. Let's move that to 269, 261. Yeah, let's do that. I think that level is level to watch. Should the price decline, we do have a little bit of down gap here. See that? Because that was where it closed. Next day gap down. So there's a little down gap there. So let's, we need to get above that. Let's go to Nasdaq. Qs. So Qs is leading today along with the banks. You can see there's gap now. This gap is going to provide solid support in the micro term, really, if should the price decline early next week. if we pull back a little bit and then gap down, that might be an island top, but there'll be a small island top that could potentially get us to 188, right? So let me see. You know what I want to do? Actually, I want to do this. Yeah, that's what I want to do. And then there's a little gap that's still open. There, right? So we got gap open. But again, there's some shenanigan here as the market trying to break out of this, because that's what it's trying to do. We got that resistance right here, right? As we were trying to break out, if there's some shenanigan, right? Just because sometimes market likes to what? Punish the chasers, right? So there are chasers here. They got scared to go long here. They got scared to go long it down here. So they're gonna chase it here, up here on new all-time highs. It might grind and grind, but one day you may see bears just bring it down with a 2% down day or 2.5% down day. That's how the market operates. Remember, when in a bull market, you're gonna see the market grinding. You're not gonna see this big move unless we saw decline. Once it starts to get up there, right? Because big purchases were made down here. Only thing, anybody buying it up here is a retail trader, the scared retail traders. The scared retail traders always come later, right? There's an accumulation phase, and then there's a public participation phase. And public always come later, and they're scared. They buy it, but they're very, very scared because they don't know sooner or later we're going to see 2-3% decline on the S&P or on the Nasdaq, and then they're going to start exiting right away. This is why you're going to see this grindy work, but we don't know how long that's going to last, right? So let's kind of continue to keep that 20 MA where it is, and I kind of forecast that we're going to continue to see this grindy work. And nobody knows how long it's going to continue to grind higher like this. Only thing you can really do at this point is to continue to give benefit of the doubt and understand some of these levels, because if we do see 20 MA breaking to the downside, then we got the 50 MA, which is coinciding with the 188, 186, which is a gap area, which would provide as a pretty solid support. If that level doesn't act as support, we got that 100 SMA, which is 185 level, which is the gap area, which is also coinciding with some of this pivot here, right? Should we see some sort of shenanigan volatility next week? But if we don't, I expect the market to continue grind higher. And the good thing about when the market is grinding higher like this, there could be so many stocks could use the environment and start just popping up. Start popping higher. I mean, Google's up like what, 10%, Twitter's up 10%. I mean, so you can see a lot of these stocks that could start to really use this good environment and to move higher while the indices are grinding. That's kind of a lot of times what you see is when the market is down, you're gonna see the indices start going up fast like this, and then when the market is grinding, which has been like this for like a whole month of July, you're going to see some of these stocks that have been lagging are going to start to come up. So this is actually a great time to be holding stocks. And that scare people is still calling for a crash, and they're missing out. And they're the one who's going to say, oh, the market is so boring. Market has been tremendously exciting for me, at least this year. I'm having the best year this year. I'm currently beating my record in 2017 record. And so it has been tremendously exciting this year, but you hear people say the market is boring, and you're only going to hear that from bears. You're only going to hear that from people not making any money because they've been either shorting or they're scared to be long on the market, and then they don't want to chase it up here because the market is just grinding because they don't know. As soon as they go long, they know. These guys know. As soon as they go long, market is going to come and punish them. So they're scared. So they're just boring for them. Russell 2000 is still kind of hanging around. Let's give it a little bit more patience. Let's be a little bit more patient with that. Semiconductor got up, had a nice intermediate from high low. We're making new highs here. It's ready for next leg run higher, and it's been outperforming everything. Semi's up 40%, and I'm actually been accumulating SOXL. This is semiconductor triple shares down here, And then I've been buying the dips all throughout this pullback. And I think, you know, they're 185%. I'm holding full at this point. I forgot where my target was. I have to go to my different tab there. But I am bullish on the semis, and semis been beating everybody. Let's go to the banks and call it a day. Banks looking great. It's you know what? Let's get rid of some of these. A little bit messy here. So yeah, so I'm gonna keep everything as it is. So we clearing that level. We're faithfully cultivating higher highs there. Next level is 28.97. What I think it's gonna do, I think it's gonna overshoot it, kind of get up here and then pull back and then do something like that. So I think banks is the only sector is still in this kind of downtrend connotation, because we're still technically in a downtrend in the intermediate term, not primary, intermediate, because we got these lower highs and needs to reclaim and neutralize that turned into something like that, right? So we're getting very close. I think all-time high is coming, and banks looking good today. It is actually leading along with the Qs there. Actually, banks is doing better than small caps or the diamond. You know, banks is actually right there with the S&P 500, so that's pretty good. But I think it's sooner or later we're gonna get into all-time high. I think the Russell and the banks, you know, they've been lagging. I think they're gonna do some catch up. And what you're gonna see is you're gonna see some of these large indices. And I've been saying this, and I'll end the video with this. You're gonna see some of these large indices like Spider and the Nasdaq. They're gonna start grinding, and you're gonna see the small caps and the banks and some of these lagging sectors start moving fast. And that's what is gonna prop up this market continually. We're gonna see 1%, 2% declines here and there, like we've seen like here. And some of these little moves. We're always gonna see that. And you're only gonna see weak traders, the scared traders, the cowards always just panicking on every time when we see this little pullback there and just always living life with fear, right? But disciplined seasoned traders who truly understand the long-term implication of this market, they're gonna look at those and they're gonna feel nothing. Either they're going to look at that as a more buying opportunity, or they're going to look at it as that's what the market does. It just goes up and down. But as long as we have, we're in an uptrend, in the primary and the intermediate and minor term, they understand that we want to continue to give benefit of the doubt to the buyers. And that's what I've been doing, and that's why I've been holding all of my positions. And I'm looking for 320. Possibly end of this year. So how much more would that be? Let me check. Let me check that. So we're already about 20% of spiders from here. So that's another 6%. That's very much doable, because I mean S&P can do 25% in a good year, maybe 30, but 25, 26% a year to date will be just, I think it will be very much doable for the S&P this year. So 320 is very much doable this year. And so you guys have a wonderful weekend, and good luck trading next week.